Recording in progress.
Good morning, students. So welcome you all on the live virtual classes organized by Board of Studies of ICAI. So friends, today we are going to discuss Ind AS 34 Interim Financial Reporting. This is a small standard, not a very big or very large standard, but very important standard, largely from the listed company's perspective, right? From the examination perspective, of course, the weightage of the standard may be less, but again, it's a very important standard from the examination perspective as well as real life perspective. To talk about myself, friends, my name is Alok Garg, and by the profession, I'm a chartered accountant. And I was qualified in 2007. So it's been 17 years when I've qualified. So I have taken more than 800 lectures on Indian accounting standard, CARO, Schedule 3, etc., etc. I have also written 4 books on Ind AS and Schedule 3. And friends, if I talk about my work experience, right now I am working as a head of reporting and internal audit with a large listed company. So this was a brief introduction about myself. So I can see a lot of participants on the Zoom link. I can see a lot of students are there. Abrikesh, Anila, Ayush, Dev, Karthik, Monica, Ajit. Okay, Ajit ji is from ICI. Neetu, Nilay, Nisha, Priya, Samir, and Shilpa ji is also there from ICI. Yeah. So friends, first of all, let me structure today's discussion. Today we are going to discuss Ind AS 34, a complete standard with some examples, illustration from ICI Board of Studies study material and examples from my side as well. The entire discussion will be on Excel file today. So purposely, friends, for this standard, I have captured everything on the Excel file, right? So you will not receive any PPT for that because I have put everything on the Excel file. So Excel file is the complete material for today's session, right? Number 3, I'll discuss the concept. I'll discuss the concept with the help of the examples. And I will also show you interim condensed financial statement of Infosys, a large listed company, right? So this is how today's discussion will be structured. It will be theoretical. It will be practical. It will be with the help of examples. It will be numerical based also. And I will also show you a real life financial statement for today's agenda, right? So let's begin the session. Friends, you have already covered Ind AS 1, presentation of financial statement, right? So if any company or any auditor has to prepare or audit financial statement, Ind AS 1 provides a complete guidance on the presentation of financial statement, right? And we have discussed that what are the component of the financial statement. Ind AS 1 also prescribes the component of the financial statement. What are the component of the financial statement? If any student can tell me or can write on the chat box, it would be great if you can write on the chat box. What are the component of the financial statement? Balance sheet. Anila is saying balance sheet. Okay. What else? Balance sheet, which gives you statement of financial position. Profit and loss. Yes. Which gives you financial performance. Statement of changes in equity, which again gives you the financial performance, the movement in the capital and reserves. The fourth one is statement of cash flows, which gives you the liquidity performance, right? And the last one is notes to accounts, which will provide you the accounting policies, the qualitative and quantitative disclosures relating to the financial statement, relating to the companies, right? So Anila, OCI, other comprehensive income, is a part of statement of profit and loss. OCI is not a separate component, right? OCI is a part of, it's a separate section in the profit and loss, statement of profit and loss. Okay. So friends, we understood, we read that there are 5 components of the financial statement: balance sheet, profit and loss, statement of changes in equity, statement of cash flows, and notes to accounts. These 5 components will always be there for a financial statement, right? So Ind AS 1 talks about presentation of financial statement. And friends, what is meant by interim financial statement, right? And we all understand that as per Companies Act and as per Ind AS 1, every company has to prepare a financial statement at least for one financial year. Minimum period is an annual period, right? In 1 year, at least in 1 year, you have to prepare a financial statement which is for a financial year, correct? Now the point is, if it is a listed company and this listed company is required to prepare the quarterly financial statement, right? They have to prepare the quarterly financial statement, which is a interim financial statement. Do you think that the entire working which they are doing for annual financial statement, they have to do for interim financial statement also? The annual financial statement is, so there are a lot of stakeholders who require interim financial statement. For example, income tax, GST. So you have to file your income tax return on an annual basis, right? Income tax return is required on an annual basis. So when you file your income tax return, your balance sheet, profit and loss, when I'm saying your, I mean to say for the company, right? Ind AS is applicable on the companies. It is not applicable on the non-corporate. Okay. So when we are saying that the income tax return has to be filed, it will capture the information of balance sheet, profit and loss, right? But which balance sheet, which profit and loss? It talks about the annual year end. Okay. When you have to do the XBRL filing in ROC, right? So let me put the usage of the annual financial statement first of all, right? So that you will have a practical aspect also. And I believe all of you must have completed or pursuing your articleship. Okay. So annual financial statement usage. Okay. Number 1, for income tax return. Okay. The annual financial numbers will go in income tax return. Number 2, GST assessments. This may also require the annual numbers. Number 3, XBRL filing, right? Number 4, annual report. Your annual report, the name is annual. So that report contains the annual financial statement, right? So there are a lot of stakeholder which requires the annual financial statement, right? But no one will require quarterly financial statement. Are you filing your quarterly financial statement in ROC? No. Are you filing your income tax return quarterly? You are only depositing advance tax. No income tax return is required on a quarterly basis. GST assessment, right? So GST assessment is also annual. So when GST assessment happens, probably the GST officer will ask for the annual financial statement. XBRL filing is also happen for the annual financial statement. Annual report is also published for the listed companies on an annual basis, right? Now the question comes that when you are preparing annual financial statement, there are a lot of usage of annual financial statement. There are a lot of key stakeholders of annual financial statement. There are a lot of regulators who need annual financial statement. But whether everyone need quarterly financial statement? Answer is no. Answer is no. So quarterly financial statement is not required by these regulators, not required to be filed with ROC, not required for annual report. So who will need the quarterly financial statement? SEBI, Securities and Exchange Board of India for listed companies, right? And friends, they will not require the quarterly financial statement. They will require the quarterly financial information, right? Quarterly financial information, not the entire financial statement. Are you getting me what I'm saying? Yes or no? There are around 19 students who have joined on Zoom link. I need yes or no from all of you. Right? Okay. Still, I got the yes from 6-7 students only. Okay. Now the counts reaches to 13, 14. Okay. Yes. Now it reaches to 17. Okay. So friends, the annual financial statement requires a lot of disclosure, a lot of notes to accounts, a lot of workings, 50, 60 pages financial statement. So the question comes if you have to file the information to SEBI on a quarterly basis in the format given by the SEBI. And of course, for that, you need to finalize your financial statement on a quarterly basis, interim financial statement on a quarterly basis. So do you require the detailed annual financial statement? Do you require the financial statement which is in line with the detailed annual financial statement? Then the question came, no. Then the answer came, no. Why? Because this quarterly financial statement is not required by the regulators. It has a limited usage, and hence the Ind AS 1 cannot be followed, and hence Ind AS 1 should not be followed, should not be followed for interim financial statement, right? If a company wants to follow, it can follow. But what is the purpose of doing all the hard work for an interim financial statement which is not required by the larger audience? So friends, to facilitate that, Ind AS 34 was notified, Ind AS 34 was drafted, which gives you the guidance for the preparation and presentation of interim financial reporting, interim financial statement, which allows you to present the limited financial information in the financial statement, right? We are going to discuss that. I hope the context is clear. So friends, if you have to prepare annual financial statement, you have to follow Ind AS 1. But if you have to prepare interim financial statement, you have to follow Ind AS 34. But if anyone who wants to follow Ind AS 1 for interim financial statement, that entity can also follow Ind AS 1 if that entity wants to follow, right? But the only thing is, if you are following Ind AS 1 for interim financial statement, you have to do a lot of work. You have to disclose all the information like annual financial statement. Okay, I hope the context is clear. So friends, there are two standards which are talking about preparation and presentation of financial statement. Number one, Ind AS 1, okay, which is applicable for the annual financial statement, complete set of financial statement, annual financial statements. Okay, and this annual financial statement requires, when I talk about annual financial statement, so this annual financial statement requires the complete set of financial statement, okay, financial statements. Friends, Ind AS 34 provides the preparation and presentation of interim financial statement. And when you are following Ind AS 34 for interim financial statement, it is not a complete set of financial statement. It gives you condensed set of financial statement, So I'll talk more about this. I'm just giving you the context. Okay. So Dev is asking, if an entity chooses to follow Ind AS 1, will it be required to also present its financial information in accordance with the guidelines given under Ind AS 34? So Dev, as far as component of the financial statement is concerned, when you are following Ind AS 1 for interim financial statement, you have to follow Ind AS 1 only. But when you are preparing interim financial statement, as per Ind AS 1, some recognition and measurement principle of Ind AS 34 is also required to be followed, which I'll discuss later on. But as far as the financial presentation is concerned, it is always as per Ind AS 1. Okay, when you are following Ind AS 1. Is that clear? But few guidance of Ind AS 34 is also required to be followed. Is that clear? Okay. Now, friends, we are moving to the standard. Inside the standard, we are delving inside to the standard. Okay. Interim financial reporting, Ind AS 34. Okay. What is the counterpart standard in accounting standard? What is the counterpart standard in accounting standard? AS 25. Right. AS 25 was there. And what is the counterpart standard in IFRS? It is IAS 34. In Ind AS 34. In accounting standard, AS 25. Friends, do you know what are the 4 pillars of accounting? 4 pillars of accounting. Can anyone tell me what is the 4 pillars of accounting? The 4 pillars of accounting is recognition, measurement, presentation, disclosure, RMPD. 4 pillars of accounting. What are the 4 pillars of accounting? Recognition, measurement, presentation, disclosure. These are the 4 pillars of accounting. If you see any standard, right, these standards are drafted on the basis of 4 pillars of accounting. Okay? Few standard will capture the entire aspect of RMPD. Few standard will capture the aspect of only D, which is disclosure. Few standard will capture the aspect of P and D, presentation and disclosure. For example, Ind AS 1, presentation of financial statement. It will not touches any recognition and measurement concept. It only touches presentation and disclosure concept, right? If I talk about any asset-based standard like Ind AS 16, it gives you guidance on recognition, measurement, presentation, disclosure, right? So this RMPD completes the entire accounting and reporting. Friends, likewise, Ind AS 34 also gives you some guidance on recognition and measurement and presentation and disclosure, right? So Ind AS 34 gives you some guidance in terms of recognition, measurement, presentation, and disclosure for interim financial statement. Okay. So in this standard, we will talk about the recognition, measurement, presentation, disclosure. So if Dev was asking, sir, if we are following Ind AS 1 for interim financial statement, do we need to follow the guidance of Ind AS 34 also? So Dev, in that case, as far as presentation and disclosure is concerned, you have to follow Ind AS 1. But as far as recognition and measurement is concerned, you have to follow Ind AS 34 if you are following Ind AS 1 for the purpose of interim financial statement, right? Okay. But the larger part we will be discussing later on. Is that clear? There are 4 pillars of accounting: recognition, measurement, presentation, disclosure. And in this standard, we will discuss the entire 4 pillars of accounting: recognition, measurement, presentation, disclosure for interim financial reporting. Okay. Ayush is asking, sir, do Ind AS 1 specifically mentions the option to allow its use in interim financial statement? Ayush, Ind AS 1 does not mention, Ind AS 34 mention. Okay. It is not written in Ind AS 1, it is written in Ind AS 34. Okay. Now the word interim financial reporting. What is meant by interim financial reporting? So I will split this word into 2 parts. Interim financial reporting, interim plus financial reporting. Can I say interim plus financial reporting? Financial reporting. Interim plus financial reporting. What is meant by interim? Interim means a period which is for less than 1 year. What is meant by financial reporting? Means reporting of financial statement, reporting of financial information. So interim financial reporting means preparation of financial statement for an interim period which is less than 1 year. Is that clear? Which is for less than 1 year. So it means if a company is required or decided to prepare a financial statement which is for a period less than 1 year, in that case, it will be considered as a interim financial reporting. It will be considered as an interim financial statement. Interim financial reporting means interim financial statement. What is meant by interim? A period. Interim period is a period which is for less than 1 year. Okay. Okay. So we are talking about a financial statement. We are talking about a financial statement which is required to be prepared for less than 1 year in this particular standard. So this particular standard is applied when an entity has decided to prepare, the financial statement for an interim period. Okay, understood. Now, what could be those companies who are required or decided to prepare financial statement for an interim period? What can be those companies? Who are those companies? Listed companies. So friends, listed companies regulators is SEBI. Okay. In addition to MCA, the regulator of listed companies also Securities and Exchange Board of India. And SEBI requires for all the listed companies to file their financial results on a quarterly basis. Okay. Now, if these listed companies has to file their financial results on a quarterly basis to the stock exchanges, to the SEBI, in that case, these listed companies are required to prepare the financial statement for an interim period, which is quarterly, half yearly, 9 months, and then annual. Okay. So these listed companies are reporting on quarterly or half yearly basis. If it is an equity listed company, in that case, it is required to file their financial results on a quarterly basis. If it is a debt listed companies, it is required to file their financial results on a half yearly basis. Okay. So if these companies are required to prepare their financial statement on a quarterly basis or on a half yearly basis, it means it is for less than 1 year. It means they have to prepare the interim financial statement. It means Ind AS 34 will be applicable. Okay. So interim period, as we discussed, it is a period for less than 1 year, which say quarterly, half yearly, etc. So in 12-month period, there are 4 quarters. So Q1, Q2, Q3, Q4, right? So these quarters are known as an interim period. Okay. When a company is preparing the financial statement for less than 1 year, it is known as an interim period. So are we clear on the interim period? Are we clear on the interim financial reporting, interim financial statement? Are we clear? Yes or no? Okay. Now, friends, the question comes whether Ind AS 34 is applicable on the financial results to be published as per the SEBI requirement. Friends, whether Ind AS 34 is applicable on the results to be published as per SEBI requirement. Karthik is saying no. What about others? My question is, listed companies are required to file their financial results to stock exchanges on a quarterly basis. My question is whether Ind AS 34 is applicable on the financial results which is required to be filed to the SEBI. What is your view? Yes or no? No. Uppercase is also saying no. No. Dev is saying no. They have to follow the format given by SEBI. So friends, they have to follow the format given by the SEBI. Ind AS 34 is not applicable. But that format requires the financial information like the entire P&L. Right. So how will you get the financial information until and unless you will prepare the financial statement? Am I right? Am I right? So friends, the financial results has to be published as per the stock exchange requirement, SEBI requirement. But to fulfill that SEBI requirement, the company has to prepare the interim financial statement. And when the company has to prepare interim financial statement, then Ind AS 34 is applicable on that interim financial statement, not on the SEBI results. Is that clear? Is that clear? Yeah. So friends, allow me, I have to show you one of the financial results. Okay, just allow me a minute. Let me show you the financial results. I'm just opening one of the financial results. Okay, allow me a moment so that I can show you on a real-time basis. Please confirm if the published results are visible. So friends, please confirm if it is visible. I'm showing you the results of Indus Towers Limited for June 2024. I'm showing you the Indus Tower Limited results for June 2024. Is it visible? I've just opened from the internet. Is it visible, friends? Okay. So you can see this is a listed company, Indus Towers Limited, and these financial statement are for the period ended quarter ended June 30th, 2024, right? So as per SEBI, as per Security and Exchange Board of India, as per the SEBI guidelines, they have to file their results in the format which is given as per the SEBI guidelines. You can see they have given this entire P&L. They have given the P&L, okay? And in this P&L, they have given 4 periods. June 30, 2024, then the last quarter, which is March quarter, then June 30, 2023, then the full year ended. So this is as per the SEBI guideline. But in the financial statement, our P&L is only comparative, right? So current period and the last period, comparative period, right? But here you can see they have given the P&L, statement of audited standalone Ind AS financial results. These are the results, not financial statement. And they have given the P&L, entire P&L for this period. Okay, as per the SEBI format. And let me show you what they have written in the notes to accounts. Then friends, they have written in the notes to accounts, they have written, so let me zoom it and let me read for you. These audited standalone financial results are compiled or extracted from the audited. These financial results are compiled or extracted. What? Which financial results? Which is required to be filed with the SEBI. Are compiled or extracted from the audited interim condensed standalone financial statement. See, here the word is financial results and here the word is interim standalone financial statement. What is the difference between the financial statement and financial results? Financial results are those results, those financial information which has to be filed with the SEBI as per the format given by the SEBI. What are the financial statement? Interim financial statement are those financial statement which have been prepared as per Ind AS 34. Is that clear? So one of the student was asking the difference between financial result and financial statement. Is that clear? Okay. So friends, so it is written that for filing the financial results, the company has prepared the financial statement and these results are extracted from those financial statements. Okay. So they have written the audited interim financial statement for 3-month period ended June 24 have been prepared in accordance with Ind AS 34 interim financial reporting as prescribed under section 133 of Companies Act. Okay, read with rule so and so as per generally accepted principles in India, right? So they have written that, my dear stakeholders, we are filing financial results as per SEBI guideline and these financial results have been compiled from the interim financial statement which have been prepared as per Ind AS 34. Okay, friends, is that clear now? So for filing these financial results, these financial statements are required to be prepared, and whenever the financial statement is required to be prepared, Ind AS 34 will be applicable. So you can see, then they have given some limited notes as per the SEBI guidelines. Okay, these are the 4 pages results. They have given the limited results, limited disclosures, and they have only given this P&L. They have not given balance sheet and cash flow. It is a first quarter annual results. So friends, as per SEBI, in quarter 1 and quarter 3 only P&L is required, but in Q2 and Q4 the balance sheet and cash flow is also required. A statement of changes in equity is not required in financial results. Why? Because it is as per SEBI format. But when you talk about financial statement, if you are preparing financial statement, there are 5 components which is always required: balance sheet, P&L, statement of changes in equity, cash flow statement, and notes to accounts. Okay, is that clear? Let me go back to my presentation again. I hope my Excel file is visible now. Abrakesh is asking, sir, what is the full form of LODR? Listing obligation and disclosure requirement. Listing obligation and disclosure requirement. Okay. Yes. So we were discussing the question whether Ind AS 34 is applicable on the financial results to be published as per SEBI requirement. The answer is no, right? Answer is no. These results have been prepared as per SEBI LODR requirement, and Ind AS 34 is not applicable to these results. Ind AS 34 is applicable to the interim financial statement, and these results have been prepared or extracted from these financial statement. Is that clear? Okay. Okay, let's move on. Now the second question, sir, whether Ind AS 34 talks about on which entities Ind AS 34 is applicable. Yeah. Whether Ind AS 34 talks about on which entities Ind AS 34 will be applicable, this standard will be applicable. Answer is no. Friends, do you know in accounting standard days, have you read AS 21? Have you read AS 21? Have you read AS 21? One of the students saying yes. Consolidated financial statement, right? So in your CA Inter days, when you read AS 21, accounting standard 21, Abrikesh, in your CA Inter days, I believe you guys have read Ind AS, AS 21, not Ind AS, AS, accounting standard. So AS 21 does not talks about which entity has to do the consolidation. AS 21 says, if you have decided to do the consolidation, then I will be applicable. So AS 21 does not says that when to consolidate. AS 21 says how to consolidate. Likewise, Ind AS 34 does not says on which entities this standard is applicable. It says if an entity has decided to prepare interim financial statement, then I will be applicable. Now, what could be the scenario when an entity is required to prepare the interim financial statement? Number one, listed company. Clear? Why? Because listed companies are required to prepare and file financial results with SEBI. For that, listed companies are required to prepare interim financial statement, which is a quarterly or half-yearly financial statement, right? Second example, in my early days in my career, I was working with a company which was unlisted company, but that company was a subsidiary of a listed company, right? So for the consolidation of our parent, we need to prepare the quarterly financial statement while we were not a listed company, but for the purpose of our parent, because our parent was listed, we were also required to prepare the quarterly financial statement. So in that case, Ind AS 34 will be applicable. So to cut a long story short, friends, Ind AS 34 does not prescribe, does not mandate to prepare interim financial statement. Rather, if a company is required under any law, for example, SEBI LODR, to prepare the interim financial statement, or the company has decided to prepare interim financial statement, then Ind AS 34 talks about how to prepare and present interim financial statement. Right? Friends, I have seen many companies. Now the management, as a part of good corporate governance, even few private limited companies has also started preparing interim financial statement. While they are not publishing anywhere, it is not required to be published anywhere, but still they have started preparing interim financial statement. They are getting the limited review done by the auditor so that they were able to know the financial position and financial performance on a quarterly basis. Still, of waiting till year end, they are getting their financial information and financial position on a quarterly basis. So if that private limited company has decided to prepare interim financial statement, then Ind AS 34 will be applicable. Okay. So friends, in your exam, if a question will come, or a multiple choice question will come, that Ind AS 34 is Ind AS 34 requires to prepare interim financial statement for a particular set of companies. It mandates to prepare interim financial statement for a particular set of companies. What will be your answer, true or false? Tell me what should be your answer, true or false? It will be false. You're right, Dev, it will be false. Nisha, Dhyanesh, yes, you guys are right. It will be false because it does not mandate. Once a company is required to prepare from under any law, for example, SEBI, or a company is decided to prepare, then Ind AS 34 will be applicable. Friends, next question. Since I have told you what is meant by interim period is a period which is less than 1 year. So let's say if a company was formed during the year, say 1st October, okay, 2021, and they are preparing their first financial statement for the period ending 31st March 2022, or let's say make it the latest one, 2023, and they are preparing the first financial statement for a period ending 31st March 2024. Whether this period is called interim period and whether Ind AS 34 will be applicable. I am waiting for the answer. Nisha is saying no. Anila is saying no. Sumit is saying yes. Abrakesh is saying no. What about others? Yes, Nisha and Abrakesh has given the reason also that why they are saying no. Nisha is saying the interim period is between two annual period. Okay, two annual financial statement. And Abrakesh is saying, sir, this is the first financial statement. So, my dear friends, you are right. First of all, this company was incorporated on 1st October 2023, right? And they are not choosing to prepare the 6 months period financial statement from 1 year. Since this company has been incorporated on 1st October only, they are required to prepare from 1st October to 31st March, right? They are not choosing, they have to. So in this case, this will not be the interim financial statement, this is the annual financial statement. But their period is only 6 months, okay? So this is not considered as an interim period because the company has not chosen the period of less than 1 year. Rather, the company has to prepare the first financial statement which is less than 1 year due to incorporation during the year. Hence, these financial statements will not be treated as an interim financial statement and hence Ind AS 34 will not be applicable. Next question. A company was liquidated on 30th September again 2023. Let me write 2023, right? And they have prepared their last financial statement on September 30, 2023. Okay. So whether it is called as interim period and whether Ind AS 34 will be applicable. So Rahul, the answer is given. So in this case, the company is preparing the first annual financial statement, which is on 6 months only. So it is not an interim period financial statement, right? The answer is given. The answer is given here. Okay. It is not an interim period. It is annual financial statement. Is that clear? So Rahul has a question on transition date. Rahul, I will answer your question at the end of the session because it is not relevant to Ind AS 34 right now. Okay. I will answer your question at the end of the session. Yes, friends, a company was liquidated. A company was liquidated on 30th September 2023. Since the company was liquidated on 30th September, they have prepared the last financial statement for 6 months ending September 30, 2023. Whether it is called as an interim period and whether Ind AS 34 will be applicable. Just like the previous question, here the company is also not choosing. Since the company is dissolving, the company is liquidating, and hence they have to prepare their last financial statement, which is only 6 month period, right? It is not considered as an interim period. It is their last annual financial statement, which is having a period of 6 months only. Okay. Yes, Nisha, it is as good as an annual financial statement. Since Ind AS 34 will not be applicable because it is not considered as an interim period, then which standard will be applicable? Full-fledged Ind AS 1 will be applicable, which talks about the full-fledged financial statement. Okay, is that clear? So again, friends, this is not considered as an interim period and Ind AS 34 will not be applicable. Financial reporting of financial information in a structured way, following some rules and principles. So what is a financial reporting? Financial statement. Okay. What are the objective of Ind AS 34? Tell me. I have already spent 40 minutes on giving the context of this standard. Tell me, what is the objective of Ind AS 34? So the objective of Ind AS 34 is to provide the minimum content of interim financial report. Interim financial report means interim financial statement. And it also provides the principle for recognition and measurement in interim financial reporting, right? So it gives you to cut a long story short, it provides you the presentation, disclosure, recognition, measurement, presentation, disclosure of interim financial report, right? Scope, we have already discussed. This standard does not mandate which entity will prepare interim financial report. This standard is applicable only when the entity is required or decided to prepare the interim financial report. For example, listed companies. Okay. What is meant by interim period? Interim period means a period which is less than 1 year. So between an annual period, if a company is required or decided to prepare the financial statement for a period less than 1 year, like quarter, half year, 9 months, it is known as a interim financial report. It is known as an interim financial statement, and that period is known as an interim period. Okay. Right. Now, friends, interim financial statement. So interim financial statement is a financial statement for a period less than 1 year, which includes, friends, in 2016, I have joined a listed company, Bharti Infratel Limited, in 2016. And 16-17, when I joined, was the first year of Ind AS implementation. Till that time, the company used to prepare the quarterly financial statement, and it was a full set of financial statement on a quarterly basis. Lot of disclosures. Full set of financial statements. When I joined, then I asked a question that I understand that annual financial statement is mandatory, that we need to follow Ind AS 1 and for annual financial statement, and we have to give all sort of disclosure, all sort of notes to accounts. But since interim financial statement is not required to be published anywhere, the information is getting extracted from the interim financial statement and it has to be filed or published in the SEBI format. So why we are doing a lot of effort, why we are putting a lot of effort, why we are doing a lot of work on a quarterly basis, why we are preparing the full-fledged financial statement on a quarterly basis, why we are doing a 4-time effort in an annual period, I mean to say in 12 months period, why we are putting these efforts for the 4 times. So my predecessors told me, because Ind AS 34 has given you option to prepare a complete set of financial statement. Then I told them, I understand the standard has given an option. Why? Because you want to prepare a complete set of financial statement, you can prepare. But the standard has also given you the option of condensed set of financial statement. Condensed means chota. Condensed means smaller than the full set. Okay. So friends, Ind AS 34 says that when you are preparing interim financial statement, it can be either a full set of financial statement, a complete set of financial statement, or it could be a condensed set of financial statement. Okay, a small set of financial statement. Now tell me, with your experience, what could be better for the quarterly financial statement, for the interim financial statement, whether one has to prepare a complete set or one has to prepare a condensed set? Condensed set. Why? You are preparing financial statement not for your practice. You are preparing the financial statement for the users. And who are the user of interim financial statement? Companies are not publishing their interim financial statement except 2-3 companies which are also, which are also uploading their financial statement on their website. Otherwise, it's the management who is using that, right? So then why to spend a lot of time on these interim financial statement? And friends, that was the reason why this standard was introduced. That was the reason. Okay. So interim financial statement, the standard says that either it could be your complete set of financial statement or it could be condensed set of financial statement. If you have decided to prepare full set of financial statement, then these financial statement are like for an annual period and you have to follow Ind AS 1. You have to follow Ind AS 1. You have to give balance sheet, statement of profit and loss, statement of cash flow, statement of changes in equity and notes to accounts, complete notes to accounts. Right? Right, friends? So if you have decided to prepare a complete set of financial statement, full set of financial statement, then your every interim set of financial statement will be like an annual set of financial statement. The complete balance sheet, complete P&L, complete cash flow, complete changes in equity, complete notes to accounts has to be given. Friends, but if you have decided to prepare condensed set of financial statement, in that case, Ind AS 34 needs to be followed completely. Okay. Now, what Ind AS 34 tells you to prepare? It tells you to prepare condensed balance sheet, not balance sheet, condensed balance sheet, not P&L, condensed P&L, not cash flow, condensed cash flow, not statement of changes in equity, condensed statement of changes in equity, not the complete notes to accounts, significant or limited notes to accounts. So what is the difference between the 5 component which is in the complete set as per Ind AS 1 and the 5 component which is in the condensed set as per Ind AS 34? What is the difference? Number 1, in balance sheet, P&L, cash flow and changes in equity, the word condensed has been prefixed, right? And instead of notes to accounts, only significant or limited notes to accounts has to be given, right? More of a summarized version, right? Okay. For preparing the condensed set of financial statement, the component of financial statement requires the presentation of major heading and subheadings of the last annual financial statement. What does it mean? What does it mean? Condensed balance sheet, for example. How the balance sheet is look like? How the balance sheet is look like? What are the major heading and subheading of the balance sheet? Let me open a balance sheet for a listed company. Okay. Allow me a minute. Let me open the balance sheet of a listed company. Just give me a minute. I hope the balance sheet is visible. So this is the balance sheet of Adani Enterprises Limited. I'm just showing this balance sheet for the academic purposes. Can you see this balance sheet? I hope this annual report is visible, guys. Yes. So let me take you to the balance sheet. This is a full balance sheet. This is a full-fledged balance sheet. Okay. Annual balance sheet. So it is written as annual balance sheet. This is prepared as per Ind AS 1. Right? So if you have to prepare a condensed balance sheet, all the major heading and subheading has to be given. Okay. What is the major heading and subheadings? Like major heading is non-current asset, current assets. These are the major headings. What are the subheadings? Subheading is property, plant and equipment, right of use asset. All these headings are different. Am I right? Intangible asset, right of use asset, PPE. Okay. So it means if you are preparing a condensed balance sheet, you are required to give all the major headings. You are required to give all the subheadings. It means you have to give entire balance sheet. You have to give entire balance sheet. Okay. Sir, if we have to give the entire balance sheet, okay, then why it is called as a condensed balance sheet? Why it is called as a condensed balance sheet? Okay. So you can see this is the balance sheet. Then there is a notes to accounts. Then there is a current year and comparative year. Okay. And for every item, there is a notes to account. The detail is given in the notes to accounts for every item. Okay. Likewise, the deferred tax asset, deferred tax liability, PP, everything. Deferred tax liabilities, note number 9. Okay. Income tax assets, income tax liabilities. For everything, the detailed notes to accounts is given. For everything, the detailed notes to accounts is given. Right? So friends, now let me show you the condensed balance sheet. Infosys, in India, there are only 2-3 companies which are also publishing their condensed balance sheet on their website, which are also publishing their interim condensed financial statement on their website. So let me open the Infosys balance sheet also, and then I will show you the difference between the balance sheet and the condensed balance sheet. Okay. So I'm opening that. I hope Infosys balance sheet is visible. Infosys balance sheet is visible. Is it visible, friends? Okay. Now, what is this balance sheet? Infosys Limited. Condensed standalone financial statement. Condensed, right? And that Adani was a full set. It is condensed. What is their condensed balance sheet? Condensed statement of profit and loss, condensed statement of change in equity, condensed statement of cash flows, right? And then some notes to accounts they have given. Some notes to accounts. Now, I'll take you to the balance sheet. I'll take you to the balance sheet. This is the balance sheet. This is the balance sheet. Can you see the balance sheet? And this condensed balance sheet is as on 30th September. Okay. Condensed balance sheet as at 30th September 2021. The comparative of balance sheet is always year end, last year end. Okay. We will discuss this later on. But do you find any difference between the full balance sheet and the condensed balance sheet? Have you find any difference between the full set of balance sheet and condensed balance sheet? I have shown you the full balance sheet. Priya is saying no. What about others? Dhyanesh, what is the name of that guy? Danyanesh. Okay. So Dev, Danyanesh, and few Karthik. Okay. So few people are saying that yes, sir, the notes are lesser. The notes are less. Very good. Friends, if you see deferred tax assets, have you found any detail of deferred tax asset? There is no note number for deferred tax asset. There is no note number. Right? So friends, notes are equal authority like balance sheet. So all the major headings are there, major subheadings are there. Current number, comparative numbers are there. But why it is called as a condensed balance sheet? It is called as a condensed balance sheet because the entire notes to accounts, the entire breakup and detail of every line item is not given. Only the limited notes are given, which is as per Ind AS 34, right? So friends, since the breakups details are not given for every item, and hence it is called as a condensed balance sheet, right? Hence it is called as a condensed balance sheet. Is that clear? Is that clear? So condensed balance sheet has to be prepared for in standalone as well as consolidated. Okay, so likewise, my dear friends, likewise, there is a condensed statement of profit and loss also. Condensed statement of profit and loss also. Okay, condensed statement of profit and loss. So for every line item, you can see there is no notes to accounts for every line item. You can see there is no notes to accounts. Okay, so that is why it is called as a condensed. But otherwise, the major headings, subheadings are same. Okay, the cash flow. Since the cash flow is also prepared from the condensed balance sheet and P&L, it is known as a condensed cash flow. Condensed statement of changes in equity is actually same like a statement of changes in equity. But since the balance sheet and P&L is condensed, it is also known as a condensed statement of changes in equity. The cash flow is also known as a condensed statement of cash flow. Okay. Condensed statement of cash flows, right? So friends, I believe now you guys have understood the difference between the full set of balance sheet, P&L, statement of changes in equity and cash flow versus the condensed set of balance sheet, P&L, cash flow and statement of changes in equity. The only difference is the format will be same, right? The content will be same. The only difference is for every line item, the detailed breakup in the notes to accounts will not be given for every line item. Okay. So like annual financial statement, whenever you want to have a detail for each line item on the balance sheet and P&L, you can go to the notes to accounts and check those line items. But in interim set of financial statement, you will not find the detailed breakup of every line item of the balance sheet and P&L. Okay. So this is known as a, is that clear? Is that clear, friends? So guys, just leave the period part. Sir, what is the comparative period? Which period information is given? I'm only talking about right now condensed accounts. Okay. I will discuss the period also. So friends, now we are clear. We understood what is interim period. Now let me summarize what we have discussed in the last 55 minutes. We have discussed why Ind AS 34 was issued. We have discussed what is meant by interim period. We have discussed what is meant by interim financial statement. We have discussed on which entities Ind AS 34 is applicable. And we understood that Ind AS 34 does not mandate. It will be applicable only when the entity is required or decided to prepare interim financial statement. Then we discussed interim financial statement can be prepared in two ways. Number one, it could be a complete set of financial statement. Number two, it could be a condensed set of financial statement. If you want to prepare a complete set of financial statement, you have to follow Ind AS 1 and you have to give all the component of the financial statement, right? It is just like an annual financial statement. But if you have to follow the condensed financial statement approach, then you have to follow Ind AS 34 for the presentation and disclosures. So you have to prepare condensed balance sheet, P&L, cash flow and statement of changes in equity. And you are not required to give the entire notes to accounts. You have to give the limited notes to accounts, okay? Which we are going to discuss later on. For preparing the balance sheet, P&L and cash flow and statement changes in equity as a condensed. So it is equally same like your annual financial statement component, but the only difference is for every line item, the detailed breakup or notes is not required to be given. Okay. So that's the difference, and hence it is called as a condensed set of financial statement. I hope it is clear, friends. I hope it is clear. Yeah. So now we will be going to discuss the what are the significant or limited notes to accounts. But before that, let me discuss that what are the period which is required in every interim financial statement. Correct? Sir, a doubt, can we relate this standard with SRE 2400? If any, please clarify. So, Sriya, are you talking about that limited review part? So, Sriya, in case of a limited review or in case of an audit of interim financial statement, normally what happens when the auditor is auditing your interim financial statement or auditor is reviewing your interim financial statement, then auditor has to issue the report. Okay, either limited review report or the audit report as per that SRE 2400 on these interim financial statements. Okay, right? So the SRE 2400 is on the part of the auditors, right? So please understand, if you are an auditor, you have to follow auditing standard as well as you have to follow accounting standard. Here we are discussing accounting standard, Indian accounting standard. Okay. So whenever you are giving your report on the financial statement as an auditor, you need to check the compliance of Ind AS as well. Okay. So for those financial statement, you have to follow Ind AS 34. Does Ind AS 34 same as AS 25? So Danyanes, there are limited differences between Ind AS 34 and AS 25. Okay. It is not exactly same, but as far as construct is concerned, I can say that this standard is 95% same in comparison to AS 25. Okay. Yes. So now we are discussing the comparative period. Whether comparative period is required in case of condensed financial statement or in case of interim financial statement. Yes. Like annual financial statement, every interim financial statement is required to have the comparative period also. Yes, it is mandatory, right? Now, what are the period for which interim financial statement is required to be presented? Okay. So friends, let me talk about the period. What periods are required to be presented? Okay. Let me talk about the periods. ABC Limited is preparing its condensed financial statement for the period ended 30th September 2023. Suggest the comparative of these financial statement. You guys need to suggest me the comparative. Balance sheet. Friends, this company is preparing the financial statement for the period ended 30th September. So balance sheet is for which date? Balance sheet is always as it. Which date balance sheet is required to be prepared? What is my current period? Please tell me. I need the quick answer. I am talking about current period. Dev, you are talking about the comparative period. I am talking about current period. Yes, my current period is 30th September 2023. But what is my comparative period? What is my comparative period? Balance sheet is not for the period. Balance sheet is as on date. Yes, my comparative period for balance sheet is not 30th September 2022. It will be, so Zini, it is not 30th September 2020, 31st March 22. It is 31st March 2023. Last audited annual closing date. Last audited annual closing date. 30th September 23 versus 31st March 23. So friends, please remember, if you are preparing any interim financial statement, the comparative balance sheet is always last annual closing date, right? So for 30th September 23, the last annual closing date is 31st March 23. Sir, why it is not 30th September 22? Why? So friends, the balance sheet is always as on date. The balance sheet is not for the period. It is always as on date. For example, Tata Steel Limited has purchased a plot in 1910 in Jamshedpur for 1 crore rupees. So 114 years ago, they have purchased a plot, 104 years ago, right? 104 or 110 years ago, they have purchased a plot. And that plot is still coming into their balance sheet, right? That is still coming into their balance sheet. So your balance sheet numbers are always carried forward, carried down and brought forward, right? carried forward and brought down. So that is why balance sheet is always as on date, and balance sheet has to be compared with the last annual closing date, right? Last annual closing date. And annual accounts are always subject to audit. You guys understand that, right? So Ayush, I have given you the reason that why comparative period is my last annual closing date, because the balance sheet number is always as on date number, right? So this is the requirement of the standard. Even this requirement was in AS 25 also. There is no change between AS 25 and Ind AS 34. What about P&L? What about P&L? Year to date. What is year to date? Means 1st April 2023 to 30th September 2023. What is the comparative period? P&L is for the period. Balance sheet is as on date, but P&L is for the period, right? P&L is always for the period. You agree with me? It is for the period. So what is comparative P&L? 1st April 2022, last 6 months. Last year 6 months. Because the P&L performance is for the period. So current 6 months number versus last 6 months number. Right? Is that clear? Ayush, the standard requires to prepare the last annual audited number to be presented for balance sheet, right? This is the requirement of the standard. Okay. And Ayush, every company has to prepare and present the annual financial statement. Every company, but it is not necessary that every company has to prepare quarterly financial statement. For example, debt listed company. The debt listed companies are required to prepare only half yearly financial statement. They have to file their SEBI results on a half yearly basis. In that case, you will not find the June balance sheet. Okay, understood? The equity listed companies are required to file quarterly results, but debt listed companies are not required to file quarterly results. They have to file half yearly results. Okay, so standard requires the balance sheet is always compared with the last annual audited closing date, right? Because the balance sheet numbers are always as on date numbers. Okay, so you can compare 30th September balance sheet with the 29th September balance sheet also. It is always as on date number. Like I've given you example. If your grandfather has purchased a building 50 years ago, that building will always come in every balance sheet of your grandfather. Now, friends, so P&L we have given for half year, friends, but P&L is also required to be given for the quarter, FTQ for the quarter, right? If the company is a debt listed company, then only half year is required. But if a company is also an equity listed company, in that case, for the quarter is also required to be given. For the quarter means for the current quarter. What is the current quarter? Tell me. In April to September period, what is my current quarter? In April to September period, what is my current quarter? Tell me. What is my current quarter? Yes, July to September. 1st July 2023 to 30th September 2023. Same way, I need to give the comparative last quarter as well. 1st July 2022 to 30th September 2022. Sir, in P&L, why year to date and for the quarter is given? Because, friends, this Ind AS 34 and AS 25 is aligned with financial results also, SEBI requirement also, right? And in SEBI, the current quarter and year to date, both P&L is required to be given. So see, what about statement of changes in equity? Statement of changes in equity is always for the period. Again, it is not as it. Is it for the period? Balance sheet is as it. P&L is for the period. Statement of changes in equity is for the period. Cash flow is for the period. So statement of changes in equity is year to date. Not for the quarter is not required. Okay. Again, cash flow statement is also for the year to date, right? 6 months. What about notes to accounts? Notes to account is as it and for the period as well. As it and for the period as well. So whenever there is a notes to account, as per the above period. As per the above period. Okay. Is that clear? Is that clear, friends? Clear or clear? Clear in mind or clear from mind? Clear in mind or clear from mind? In mind. Okay. Okay. How many of you are in mind? How many of you are from mind? In mind. Okay. So we discussed we discussed complete set of financial statement, condensed set of financial statement. I have shown you the SEBI results. I have shown you the full balance sheet. I have shown you the condensed balance sheet also. Okay. And then we have discussed what is the comparative period. Now I'm asking a question and you guys have to tell me quickly. ABC Limited is preparing its first condensed interim financial statement for the period ending 30th June 2024. You need to give me all these dates. You need to give me all these dates. Tell me the current period, the comparative period quickly. I will type you as per your suggestion only. So 31st March 20. Well, first of all, tell me the current period. 30th June 2024. Very easy. Okay. Comparative balance sheet. Very good. 31st March 2024. Last annual audited closing date. Okay. What about P&L? P&L is 1st April to year to date is 1st April to 1st April 24 to 2024 to 30th June 2024. And the comparative is 1st April 2023 to 30th June 2023. What is whether year to date and for the quarter both are different? Same. So in that case, you are not required to give two columns. This is same because this is the first quarter. This is same. You are not required to give this two time. Okay. So in this case, year to date and for the quarter will be same. Right? SOCI. What about SOCI? Same. 3 months. What about cash flow? Same for the 3 months. And notes to accounts as per above period. As per above period. Friends, now I'm asking you again one question. And you need to answer me quickly. ABC Limited is preparing its condensed interim financial statement for the period ended 31st December, 9 months, 31st December 2023. Now you need to tell me what is the current period, what is the comparative period. Balance sheet, of course, current date is 31st December, balance sheet. What is the comparative period? What is the comparative balance sheet date? What is the comparative balance sheet date? Sriya, ABC Limited is preparing its condensed interim financial statement for the period ended 31st December 2023, not December 24. So 31st December 23 means 31st March 23. Very good. What is my P&L? 1st April 23 to 31st December 23. Current period. What is my comparative period? 1st this April 2022 to 31st December 22. 9 months. Right? What is my for the quarter? What is my current quarter? Yes, very good, Dave. 1st October 2023 to 31st December 2023. The comparative is 1st October 22 to 31st December 22. Okay. Now, what is my statement of changes in equity? 9 months. What is my cash flow? 9 months. What is my notes to accounts as per above period? Okay. Now you guys have become expert. Yes or no? Yes or no? Yes. Whether this part is clear to everyone? Whether this part is clear to everyone? So let me show you the Infosys report now. And friends, this Infosys financial statement. Thank you, Sriya. Thank you. So friends, this Infosys condensed financial statement is for the 3 months and 6 months ended 30th September 2021, right? 3 months and 6 months ended. Okay. So now let me show you one by one. Balance sheet. Your balance sheet is, since it is a September 21 balance sheet, so current period is September 21 and the last annual closing is 31st March 21. Correct? This is what we discussed. P&L. P&L year to date. Year to date means 6 months. 6 months. 6 months ended 30th September 21. 6 months ended 30th September 20. Then current quarter. 3 months ended September 21. 3 months ended September 20. Right? Suna suna lag raha hai? Suna suna lag raha hai. Is it something which is heard or is it something which is blank? Heard or blank? Heard? सुना सुना तो नहीं लग रहा? सुना सुना लग रहा है? Yes? Okay. Now let's go to statement of changes in equity. Statement of changes in equity, you can see 1st April 20 to 30th September 20 and 1st April 21 to 30th September 21. 1st April 21 to 30th September 21. Then go to cash flow. If you go to cash flow, then 6 months ended 21, 6 months ended 20, September 20, right? And then there is a notes to accounts. I hope this is clear to all of you. Yeah. So friends, we discussed the comparative period also. Thank you, Zini, for the feedback. Thank you so much. So now we have to go to the notes to accounts, right? We have to go to the notes to accounts. So friends, it's 8:20 now. Let's have a 10 minutes break and then we will discuss the last part of this chapter, which is notes to accounts, along with some examples and illustrations. Okay. Right. And while discussing the notes to accounts, we will be discussing the recognition and measurement principles also. So it's 8:20 now. Let's have a 10 minutes break and we will start at 8:30. Ashok ji, break is there. Yes. So we were discussing notes to accounts. Now the question is, the biggest difference between a complete set of financial statement and a condensed set of financial statement is the notes to accounts. In the full set of financial statement, entire notes to accounts has to be given, but in interim financial statement, only limited notes to accounts has to be given. Now, what are those limited notes to accounts? Okay. So friends, I will bifurcate these notes to accounts into two parts. Okay, number one, significant notes to accounts. Significant means whenever there is significant transactions. Okay. In that case, the disclosure is required to be given for that significant transaction in the notes to accounts. For example, following disclosures are required to be made if material, if significant. For example, write down inventory to NRV or reversal of impairment of inventory. Friends, this is H per Ind AS 2. H per Ind AS 2. So when you read Ind AS 2, this is a standard which talks about inventory, right? And whenever there is an impairment of inventory or reversal of impairment of inventory, then that is required to be disclosed. But whenever the amount is material, whenever it is significant, then only it is required to be disclosed. Understood? Yeah. So, sir, what is impairment of inventory? How when an impairment on inventory can be reversed? You will discuss this concept in Ind AS 2, right? Because we are discussing the standard relating to the interim financial statement, right? So financial statement captures everything. Okay. So we are only discussing which disclosure is required in the notes to accounts. So whenever there's an impairment on inventory or reversal of impairment on inventory, then it is required to be disclosed only when it is material. If the impairment is not material, for example, the inventory is 100 crore and the impairment is, let's say, 30 lakh rupees, 20 lakh rupees. It is not material. It is not required to be disclosed. Okay. Clear? Is that clear? Impairment of financial asset as well as non-financial asset. If there is an impairment on PPE, intangible asset, investment property, right? Or there is an impairment on trade receivables, debtors, right? So as per Ind AS 109, this concept you will learn in Ind AS 109 and Ind AS 36. So I'll teach you Ind AS 36, impairment of asset standard. So there we will be discussing that when an impairment can happen on a tangible or intangible asset. Okay. And in 109, we will be discussing the impairment on financial asset. So if there is a impairment on tangible and intangible asset and financial asset, and if the amount is material, then only it is required to be disclosed. A reversal of any provision for restructuring in Ind AS 37, as per Ind AS 37. So in Ind AS 37, you will discuss the provision for restructuring, and you will be discussing when a restructuring provision has been made and when it is going to be reversed, right? So whenever there is a reversal of any provision for restructuring in any interim period and the amount is material, it is required to be disclosed separately in the notes to accounts. Acquisition and disposal of PPE, purchase of fixed assets and sale of fixed assets. Acquisition and disposal of property, plant and equipment is also required to be disclosed in the notes to accounts if the amount is significant or material, right? As per Ind AS 16. Capital commitment, contingent liability and contingent asset. These are also required to be disclosed in the interim financial statement. So this contingent liability and contingent asset is as per Ind AS 37. For example, the company is a like Reliance Industries Limited. Lakhs of crores of revenue, lakhs of crores of balance sheet size. The company has received a demand from Income Tax Department for rupees 2 crore. Is it material for Reliance? Whether it will be material for Reliance? Yes or no? The demand of 2 crore, will it be material for Reliance Industries? Tell me. Answer is no. They are rounding off their number in crores, right? So if there is a small demand of 2 crore for them, then is it required a disclosure in the interim financial period? Yes or no? Yes or no? the disclosure is not required. Why? Because the amount is not material. You have to see from that entity perspective. Since the amount is not material and hence this contingent liability notes is not required. Correction of prior period error. If there is a prior period error, right? If there is a prior period error, in that case, in Ind AS 1, have you discussed the concept of third balance sheet? In Ind AS 1, have you understood and read the concept of third balance sheet? In case of correction of prior period error, in case of change in accounting policy, the comparative needs to be restated. The opening of the comparative balance sheet needs to be presented. I believe Mr. Bhalla has taken this third balance sheet concept in Ind AS 1. The same concept is there in Ind AS 34 also. So if there is a correction of prior period error, right, in that case, you have to correct your comparative period. You have to give the third balance sheet, which is opening of the comparative period balance sheet. Same concept is there in Ind AS 34 also. So whenever you are correcting your prior period error, you have to give those disclosures, right? So this is as per Ind AS 1 and Ind AS 8. Okay. So the disclosures are required to in the notes to accounts whenever this prior period error is material. Changes in the business or economic environment, which has an impact on the fair value of the financial assets or liability, right? For example, inflation has been increased. For example, there is some geopolitical issues. For example, there is a war, right? So if there is a change in business or economic environment, then the disclosure is required. How it is impacting your financial numbers. Any default in the loan covenants. Friends, if the company has defaulted in any loans, terms and condition, right? Loan condition compliance, then it is also required to be disclosed. In Ind AS 1, you have discussed the long-term loan covenants. Have you discussed the default in the loan covenants, adjusting event, non-adjusting event? Have you discussed in Ind AS 1? That carve out, Mr. Bhalla must have been taken that carve out. No, the carve out. Okay, so it is part of Ind AS 1 and Ind AS 10 both. But not to worry, I'll cover in Ind AS 10, not to worry. Okay. So related party disclosure, as per Ind AS 24. As per Ind AS 24, right? So related party disclosure, if there is a transaction with the related party which are material, it is again required to be disclosed. Okay. So Neha, this list is inclusive list, right? I will not say this list is exhaustive. Other than this list, if there is any item which is material, if there is any event which is material in that interim period, that event is required to be disclosed. That event is required to be disclosed. Okay. Right. But you can say that largely it captures everything, because first I will be talking about the material disclosure. Then I will be talking about the mandatory disclosure. Irrespective of the materiality, the mandatory disclosure are required to be disclosed. Okay. So right now I'm discussing the material disclosure. Changes in the classification of financial assets and financial liabilities. Friends, as per Ind AS 109, when you read Ind AS 109 financial instrument, you will discuss when a financial asset and liabilities classification can be changed. So if there is a change in the classification of financial asset and liability, it is required to be disclosed. Okay. Then the other disclosure is transfer between the input hierarchy in the financial asset or liability. Friends, when you read Ind AS 113, which is a fair value measurement, Ind AS 113. So Ind AS 113 has given a concept of input hierarchy in which the financial asset and liability has been categorized. So whenever there is a change in input hierarchy, that disclosure is also required to be disclosed. Okay. Just you need to remember these disclosure. Okay. So since we are covering Ind AS 34 in the beginning, right? Like we have covered Ind AS 1 in the beginning, these two standard touches the entire financial statement, right? And for these disclosure, you need to have the understanding of the respective standard. Okay. So whenever you complete the respective standard, you will be able to understand, okay, what is the change in classification of financial assets and liabilities? What is the transfer between the input hierarchy? Okay. But for the time being, you need to remember that these are the disclosure which are required to be disclosed in the interim financial statement if the amount is significant or material, right? Okay. So this is just for the remembering, just for the learning. Friends, other disclosures. What are the other disclosures? So in the first part, I have talked about that the disclosures are required to be made if only significant. But in the second part, I'm talking about irrespective of the materiality, whatever I'm going to talk about the disclosure, right? These how many? 12 disclosures are mandatory irrespective of their materiality. Number one, a statement that the same accounting policy or method of computation is followed in the interim financial statement as in the last annual financial statement. Friends, in the balance sheet, if the balance sheet is, I'm talking about the balance sheet means financial statement. In the financial statement, if the financial statement is 50 pages, can you tell me what is the quantum of accounting policy in the financial statement? Roughly how many pages will be covered in the annual accounting policy in the 50 pages financial statement? Can you tell me? Almost 10 pages, right? So 8 to 10 pages could be the accounting policy in the 50 pages financial statement. So friends, Ind AS 34 says that if you are preparing a condensed set of financial statement, you are not required to reproduce the entire set of accounting policies again. It says that simple, you have to make a statement that the same accounting policies and method of computation has been followed in this interim period, whatever we have followed in the last annual period, whatever we have followed in the last annual audited financial statement and disclosed in the annual audited financial statement. Sir, but what happens if we will change the accounting policy? Why? Because some new standard have been issued, right? For example, in 2019-20, in the year 2019-20, 19-20, Ind AS 119 was notified. Sorry, Ind AS 116 was notified. 116 on leases. And friends, up to 31st March 2019, Ind AS 17 was followed up to 31st March 2019. From 1st April 2019, Ind AS 116 was followed, right? So Ind AS 116 on leases was completely different from Ind AS 17, right? So the company which were producing their financial results, or the company which has prepared their interim financial statement for June 2019, they had to change their lease accounting policy. They had to change because the standard had been changed. So in that case, friends, like when I was the reporting head of that listed company, what we did, we have written a statement that all the accounting policies have been consistently and followed, right, in this interim period, just like the last annual audited period, except the accounting policy on leases. Why? Because the Ind AS on leases has been changed, right? And then we have given the new lease accounting policy in the interim period. Why? Because that accounting policy was not there in the last year. Okay. So if different accounting policy and method has been followed in comparison with the last annual financial statement, then the nature and impact needs to be disclosed, right? So along with the new accounting policy, the nature and impact is also required to be disclosed in the interim period. Is that clear? Irrespective of the materiality. Makes sense also, right? This makes sense also, na? Explain the seasonality or cyclical nature of operations. Explain the seasonality or cyclical nature of the operations. Okay. So just a minute. Just give me a minute. Yes, I will share this Excel file. Yes, definitely. The entire notes are there in this Excel file, and definitely I'm going to share this Excel file with the Board of Studies, and they will share with you guys. Yes. So we talked about accounting policy. Explain the seasonality or cyclical nature of operation in the interim financial statement. Sugar industry. What is the nature of sugar industry? It is a seasonal industry, right? So if the company is operating in a seasonality or cyclical nature of operations, it is required to be disclosed in the interim financial statement, right? Exceptional item. Probably you have discussed the concept of exceptional item in Ind AS 1. Yes or no? In Ind AS 1, you must have discussed the concept of exceptional item. Yes. So exceptional, if there are any exceptional item, it is required to be disclosed separately in the notes to accounts, right? What is the type of exceptional item? What is the impact of exceptional item? Nature and changes in estimate from last interim period or last annual period. If there is a change in estimate in any interim period, it is required to be disclosed. For example, can you give me an example of change in estimate? Change in useful life of fixed asset. Change in residual value, right? Change in the provision of warranty, percentage of provision of warranty. So these are the example of, yes, change in depreciation. These are the example of change in estimate. Okay. Issue, purchase or repayment of equity and debt security. If there is any change in capital structure, for example, the company has come out with the IPO. The company has raised a right issue. The company has done the buyback. The company has done the bonus issue. The company has issued debentures. Irrespective of the materiality, the disclosure is required to be made, right? Dividend paid or declared. Doesn't matter whether the company has declared 10 paisa per share, 5 paisa per share, but it is required to be disclosed, right? It is required to be disclosed, correct? Is that clear? Segment information. Friends, segment reporting, right? When you read Ind AS 108, the faculty will tell you, the teacher will tell you Ind AS 10, segment information, segment reporting as per Ind AS 108. Segment balance sheet, segment profit and loss, segment results, right? So friends, if the company has a segment, the segment reporting is also mandatory in all the interim period, all the interim financial results, all the interim financial statement, okay? Events occurring after balance sheet date, events occurring after reporting period. Friends, like 31st March balance sheet is going to be approved in the board meeting subsequent to 31st March, right? And you understand the subsequent period. You understand the events occurring after the reporting period. Yeah. Yes. Between 31st March and the date when the financial statement are going to be approved. So whether for every interim financial statement, like for listed companies, there will be a subsequent period. Answer is yes. For example, 30th June, financial statement are going to be approved in the board meeting, which may be in July or August, right? So that period will be a subsequent period. Okay. So subsequent events occurring after subsequent period, reporting period has to be disclosed. Business combination. If the company has acquired any other company, or there is a loss or control in subsidiary, the company has a 60% stake in a subsidiary, but during the interim period, the company has sold a stake of 20% in that subsidiary, or the company has announced some discontinued operations. So friends, if there is any business acquisition, there is any loss of control in subsidiary, any discontinued operation, this is required to be disclosed in the notes to accounts, irrespective of the materiality in the interim period. Fair value disclosure of financial instrument. Friends, as per Ind AS 109 and Ind AS 113, there are some fair value disclosure which is required for financial instruments. Okay. So it is mandatorily required to be disclosed. If an entity become investment entity or ceases to be investment entity, friends, when you read Ind AS 110, Ind AS 110 is on the consolidated financial statement, right? So in the consolidated financial statement, there is a concept of investment entity. Okay. So if a company has become an investment entity from a normal entity, or a company has become a normal entity from an investment entity, in that case, it is also required to be disclosed in the interim period. Okay. Okay. You will discuss what are the conditions of investment entity in Ind AS 110. Disaggregation of revenue from contract with the customer. What is meant by disaggregation of revenue from contract with the customer? For example, friends, when you will see the profit and loss, in the statement of profit and loss, there is only a single line item called as a revenue from operation, right? Yes or no? Yes. There is a single line item, revenue from operation. It includes the entire revenue from operations. But that revenue from operation includes your revenue from sale of goods, revenue from supply of services, other operating revenue as well, right? So standard says that you have to, while you are not giving the entire breakup of balance sheet and P&L, but at least for revenue, you have to give what is sale of goods, what is supply of services, what is other operating revenue. This disclosure is required to be made. Okay. Is that clear? So these are the friends mandatory disclosure. You have to learn this disclosure. These are the mandatory disclosures. Okay. Friends, in Ind AS 1, there is a requirement. You have to give an explicit and unreserved statement of compliance with all Ind AS in the notes to accounts. Friends, have you read that requirement? Disclosure of compliance with Ind AS in interim financial report. In Ind AS 1, have you read the requirement of the compliance? Statement of compliance is required in every financial statement. Explicit and unreserved statement of compliance is required. Friends, Ind AS 1 says that every entity has to give a statement of compliance in the notes to accounts. What kind of statement of compliance? That the company has complied with all applicable Ind AS in its notes to accounts. Okay, in its notes to accounts. So if you have not seen that, let me show you. Let me show you if you have not seen that. So yes, if the deviation is also there, we need to disclose. So friends, I am showing you Adani Enterprises Limited annual report. You can see the statement of compliance. Can you see the statement of compliance in the accounting policy? Can you see the statement of compliance? Yeah. So it is written that the financial statement of the company have been prepared in accordance with Ind AS notified under section 133, right? So this is what they have given. So friends, likewise, in every interim financial statement, the statement of compliance is required. It is required to be disclosed. Explicit and unreserved statement of compliance in the notes to accounts. The company has to say that, listen, we have applied all the applicable Ind AS while preparing our interim financial statement. Correct? Is that clear? Is that clear, friends? So friends, we have covered the notes to accounts part, the disclosure part. Okay. We talked about condensed balance sheet, condensed P&L, condensed statement of changes in equity, condensed cash flow, and condensed notes to account, which includes significant and limited notes to account. So we talked about two kinds of notes to accounts. One, significant notes to account. Second, mandatory notes to accounts. Okay. Then friends, we are going to discuss principle of measurement and recognition. The recognition principle and measurement principle, right? Materiality, concept of materiality. Friends, in accounts, in books of accounts, when you are maintaining your books of accounts and when you are auditing your books of accounts, materiality plays an important role, right? As we have discussed that in case of my notes to accounts, we have to give all the material notes to accounts, right? For example, impairment, right? For example, contingent liability. So as I discussed, in case of Reliance, if there is an income tax demand for rupees 2 crore, it is not material. It is not required to be disclosed in the interim financial statement. Now the question comes, if you will identify the materiality, how will you identify the materiality? Right. For example, and this is a question to all of you. For example, this is an entity, Reliance Industries Limited. Okay. This company in Q1, quarter 1, June. Okay. This company revenue is, let's say, and all the numbers in crores. All the numbers are in crores. In crores. So friends, revenue is, for example, revenue is of the Q1 is, for example, 50,000 crores. 50,000 crores. Okay. The profit, let's say PAT, is 10,000 crores. Okay. The balance sheet size is, for example, 1 lakh crores. I'm just taking hypothetical numbers, okay? Don't go by the actual numbers. I'm just taking a hypothetical number for the purpose of explaining the concept. Let's say the materiality policy says that, and this is Q1, and let me talk about the Q4 also. Sorry, annual also. Annual. For the sake of annual, I'm just multiplying by 4, okay? Just for the sake of convenience. And this is, for example, your closing balance sheet, annual balance sheet could be, for example, 1,50,000 crore, because in balance sheet, much change will not be there because balance sheet number is always asset number. Okay. The company has a policy. The company has a materiality policy. Materiality policy. Any amount among higher of the following, right? What is that? So for revenue, 0.01% of revenue, right? 0.25% of PAT and 0.005% of the balance sheet size, right? So make it 0.1, make it 0.25% and 0.01%, right? This is the materiality. Now, friends, the question is, while checking the materiality, right, you are closing the interim financial statement for Q1 of RIL to check the materiality whether you need to follow quarter numbers, interim period number, or annual period number, Tell me whether you need to apply for considering the materiality, whether this number is material in that interim period or not, whether you need to follow the quarterly numbers or the annual number. Why I'm saying that? For example, if you are following the quarterly number, then what is your materiality amount? If you are following the quarterly number, your materiality amount is 50,000 multiplied by 0.10%, 50 crores, 25 crores, 5 crores. What is higher? 50 crore is higher, right? But if you apply the annual number for considering the materiality, your number will be how much? Your higher number will be 200 crores. Materiality policy, any amount higher of the following. So it becomes 200 crores, right? So it means if your contingent liability is, let's say, 100 crores, it will not come in your interim period, right? And hence, friends, in case of materiality, when you have to check the materiality, you have to check the quarterly numbers. You have to check the number of interim period to assess the materiality. And hence, so what is the answer? Answer is to assess the materiality for interim period. The numbers of interim period needs to be considered, right? Not annual period numbers. I hope it is clear to all of you now. It is clear to all of you? Yes. Percentages are the policy, right? Like the company will say, for me, 0.1%, 0.25%, and 0.01% of revenue, PAT, and balance sheet size, the higher of these will be the materiality for me, right? So percentage will be the same. But whether those percentage has to be applied for quarter number or year end number, so it has to be applied for the interim period number, which is a quarter in this case. You understand? So for recognition and measurement, right, you need to see the you need to check the numbers of interim period itself. Same accounting policy as annual, except there is a change after annual financial statement. As I told you, How can be the annual figure available in Q1? So uppercase, it can be estimated. For depositing advance tax, you are also estimating the full year number, right? Or you can check, or you can refer the number of the last year itself, right? Sir, who formulate the mortality policies? There any guidance in Ind AS for this? Ayush? The mortality definition is a very subjective definition. There is no objective definition. The company needs to, the company needs to make the policy, mortality policy, right? For their books of accounts. Okay. So there are auditing standard where this mortality has been defined, but in accounting standard, the objective definition of mortality is not there. Correct? So the companies are formulating, like I have told you, 0.1% of revenue, 0.25% of that, 0.001% of balance sheet size. So the companies are formulating this kind of mortality policy so that the consistency principle can be maintained. Okay. The second one is same accounting policy, except there is a change after annual financial statement. For example, till March 19 annual financial statement, Ind AS 17 was applicable on leases, right? But with effect from 1st April 19, Ind AS 116 was applicable. So companies have given lease accounting policy as per Ind AS 17 in annual accounts of March 19, but for interim period for June 19, they have applied Ind AS 116 for all the recognition, measurement, presentation, disclosure. Clear? Any doubt so far? Any doubt so far? Any problem? Any question? Any doubt? Yeah? No? Clear or clear? Clear in mind or clear from mind? I am waiting for the response. Okay. Third principle of recognition and measurement. Revenue. Seasonal, cyclical, or occasional. For example, the company is into woolen business, right? The company is into woolen business. In first quarter, because first quarter is a summer quarter, the company has earned a revenue of 10 crore, right? But the company is estimating that in the full year, the company will earn revenue of 200 crores in the full year, right? But in the first quarter, the company has earned a revenue of 10 crore. Now the question is, in case of a seasonal, cyclical, or occasional kind of a business, whether revenue has to be segregated on a straight line basis or on some rational basis, on some scientific basis, right? Whether revenue has to be estimated for a year and allocated to every interim period, or revenue has to be recognized in the interim period in which it occurs only. So standard says that you have to follow accrual principle. You have to recognize revenue in the interim period in which it occurs, right? So in quarter one, the revenue is only 10 crore. So you have to disclose, you have to record the revenue of 10 crore only. So that is why, friends, you remember there was the one requirement of mandatory disclosure that if the business is occasional, cyclical, and seasonal, you have to disclose. For example, in quarter one, the revenue was 10 crore only. So this 10 crore is required to be recognized. In quarter two, it is 10 crore. Again, 10 crore is required to be recognized. In Q3 and Q4, the revenue is 100 crores. It is a winter season. So in those Q3, Q4, the revenue of 100 crore has to be recognized. So probably Q1 and Q2 will be in losses, but Q3, Q4 will be in profit. Is that clear? So guys, revenue and expenses are not required to be extrapolated or interpolated. It is not going to be allocated on a scientific basis, right? It has to be recognized in the period in which it occurs. Is that clear? Is that clear or not clear? Clear. Okay. Yes, Riya, I totally agree with you in case of seasonal, cyclical, and occasional nature of business. So if your business is seasonal and cyclical, Shreya, do you think that the uniformity or comparability will be maintained? Yes or no? Of course, no. Of course, no. That is why you're required to disclose that your business is cyclical, your business is seasonal, your business is occasional. So are you devoting the same time in your studies 1 year before exam and during the exam period? Of course, answer is no. The students are devoting more time during the exam period versus 1 year before the exam in their studies, right? So if the nature of the business is cyclical, seasonal, and occasional, first of all, it is required to be disclosed, mandatory disclosure. Number two, the revenue and expenses are required to be recognized on the accrual basis. It has to be taken in the same period in which it incurred. Impairment, important aspect. Friends, while you will discuss the concept of impairment in Ind AS 36. But what Ind AS 34 says that, let me talk about. And it is coming from Ind AS 36 only. For example, the company has a goodwill. Okay. The company has a goodwill. And the company has 100 crore of goodwill. The company has a goodwill of 100 crores. In quarter one, the goodwill is impaired in quarter two due to the losses incurred by the subsidiary. But in quarter three, it got picked up and subsidiary got huge orders in Q3. Friends, in Q1, the company has acquired a subsidiary. In Q1, the company has acquired a subsidiary. Okay. So in Q1, the goodwill was 100 crores. In Q2, when the company reaches to Q2, what happened? The subsidiary has suffered huge losses. And in that case, the company was required to impair the entire goodwill. The balance of goodwill becomes zero and there was a hit of 100 crore in the P&L. Right? Okay. Now what happened when the company reaches to quarter three? When the company reaches to quarter three, in that case, the subsidiary got huge orders. Okay. And now the company wants to reverse the impairment of goodwill. My question to you guys is, can the company reverse the impairment loss of goodwill in quarter three? The impairment which the company has taken in Q2, can the company reverse the impairment in Q3? Yes or no? Answer is no. You're right, Nisha. Answer is no. Friends, Ind AS 36 says that if a goodwill has been impaired, it cannot be reversed any time in future. And friends, Ind AS 34 read with Ind AS 36 says that if a goodwill has been impaired in any interim period, it cannot be reversed in the subsequent interim period even of the same year. अगर वो same year है तो same year के भी अगले interim period में हम इसको reverse नहीं कर सकते. Right? This is what it talks about goodwill. Okay. Now, PP, the property, plant and equipment was 100 crore in quarter one, right? And in Q2, the company has recognized the impairment loss of 20 crore on property, plant and equipment. And now the balance become 80 crore in quarter two. But in Q3, the value of the PP has been increased beyond the carrying value, right? Beyond the earlier carrying value. So now in Q3, can I reverse the impairment loss which I have recorded in Q2? Answer is yes. In Q3, I can reverse. So friends, other than goodwill, the impairment loss can be reversed. I can show this PP as 100 crores. I can reverse this 20 crore in the Q3, right? So friends, goodwill impairment recognized in an interim period will not be reversed in the subsequent interim period even of the same year. But for item other than goodwill, impairment recognized in one interim period will be reversed in another period, another interim period, if situation is favorable. If situation is favorable. Clear? Is that clear? Yes or no? Yes, it can be done for other intangible asset, not for goodwill. That is why I've written the word goodwill and item other than goodwill. And item other than goodwill. Okay. So Ayush, Ind AS 38, when you read, I will teach you Ind AS 38. It says that when you have impaired a goodwill, goodwill is kind of a notional value. When you have impaired a goodwill, and when again you are restating your goodwill, it is like an internally generated intangible asset. And internally generated goodwill is not allowed to be capitalized, right? So it is conflicting with the principle of that. So that is why whenever there is an impairment of goodwill, the impairment of goodwill cannot be reversed in future. Okay. I hope it is clear to everyone. Yes or no? Yes. Friends, now I am discussing one of the illustration from ICAI study material, illustration number 5. And you can check that illustration in your study material. I have just extracted that illustration from the study material. And let me discuss this illustration. Okay. And then I will discuss the last concept of principle and last concept of recognition and measurement, which is on the income tax expense. Okay. ABC Limited manufactures automobile parts. Okay, automobile parts. So friends, ABC Limited manufactures automobile parts. ABC Limited has shown a net profit of 20 lakh for the third quarter of 2001. Okay, for the third quarter of 2001. Following adjustments are made while computing the net profit. So what is the net profit? 20 lakh. And what is the quarter? Third quarter. Okay, third quarter. Following adjustments are made while computing the net profit. Bad debt of rupees 1 lakh incurred during the quarter. Right. So the company is preparing the financial statement of third quarter. Okay, third quarter. And there was a bad debt of rupees 1 lakh, which was incurred during the quarter. Means a bad debt has been done. A bad debt was incurred in the third quarter. One of the customer probably becomes insolvent and he is not paying the money, and hence the company is incurred a bad debt of how much? Of rupees 1 lakh. But the company has deferred 50%, means 50,000 bad debt the company has taken in Q3, and 50% bad debt the company has deferred. The company has deferred. Okay. Now the question is that okay? The adjustment which the company has made and the company has arrived at a net profit of 20 lakh, whether the company should have recognized entire 1 lakh in the third quarter, or the company is okay in compliance with Ind AS 34 by deferring the bad debt of 50,000 in the next quarter. The company is not in compliance. The company is wrong, right? So whenever the expense has been incurred, this expense has to be recorded in that interim period only. Correct? So in this case, you're right, accrual principle has been violated in this case. What I will do, I need to adjust the 50,000 in the current interim period only while arriving at a right net profit. Additional depreciation of 4,50,000 resulting from the change in method of depreciation. In quarter 3, the company has changed some estimate. And due to the change in estimate, the company has incurred an additional depreciation of 4,50,000. Tell me whether the company is right in claiming the additional depreciation of 4,50,000 due to the change in estimate. Yes or no? Whether the company is right or the company is not right. Tell me. Yes, because it is your change in estimate. The company is right in doing that. The company is right. Okay. There is no problem, because whenever there is a change in estimate, the impact of change in estimate has to be recognized in the current period, right? Be it interim period or be it annual period. It is recognized in the current period. Okay. Is that clear? Any doubt, any challenge? I hope it is clear to all of you. Friends? Yes. Yes, disclosure is required. Of course, yes, but this entire 4,50,000 has to be taken in the period in which this estimate has been changed. Okay. Yes. Now let's move to the next. I hope everyone is okay with this. Let's move to the next. Exceptional loss of, so this we have covered. Exceptional loss of 28,000 rupees incurred during the third quarter. 50% of exceptional loss have been deferred to the next quarter. Again, the company has incurred some exceptional loss in the period and they have deferred 50% in the next period. 14,000 they have deferred. What to do now? This has to be captured in the current period only. Entire 28,000 has to be adjusted in the current interim period. Rupees 5 lakh expenditure on account of administrative expenses pertaining to the third quarter. There is some administrative expenses which has been incurred in the third quarter is deferred on the argument that the fourth quarter will have more sales. On the argument that the fourth quarter will have more sales. Right. Therefore, fourth quarter should be debited by higher expenditure. The expenditure are uniform throughout all quarters. Right. So the company has incurred some advertisement expenses in Q3. The company has paid 5 lakh rupees. Now the company is arguing, see, my benefits will from this advertisement will arrive in quarter 4. Right. I will have more sales and hence I will debit this expenditure in quarter 4, not in Q3. It is not right. The expenditure has to be taken into the consideration in which it is incurred. The entire 5 lakh has to be adjusted in the current period. Right. So, ascertain the correct net profit to be shown in the interim financial statement of the third quarter to be presented to the board of directors. So friends, we have discussed all the adjustments right now. So how will we arrive at this? 20 lakh was the net profit given in the question. Bad debt 50,000 we have to be adjusted, which was deferred. Additional depreciation, no adjustment. Exceptional loss of 14,000 needs to be adjusted. Admin expense of 5 lakh needs to be adjusted. My adjusted correct net profit for quarter 3 is 14 lakh 36,000, right? Not 20 lakh. I hope it is clear to all of you. I hope it is clear to all of you. Yeah. So Dev is asking, sir, why additional depreciation not adjusted? Friends, whenever there is a change in estimate, this additional depreciation is due to change in method of depreciation. And change in method of depreciation is change in estimate. So whenever there is a change in estimate, the impact has to be taken in the period in which the estimate has been changed, right? So the question says that the additional depreciation of 4,50,000 is resulting from the change in estimate of depreciation, right? Change in the method of depreciation. Okay. Time of change in estimate is important. Yes. So if in the current interim period we are changing the estimate, in that case, the impact of change in estimate has to be taken in that period only, as per Ind AS 8 and as per Ind AS 34. Friends, now I have reached to the last part of this standard, a very, very, very important part. Friends, in the exam, if you will get a practical question, numerical on Ind AS 34, so most probably, if the question is complex, most probably it will be on income tax calculation, right? So let me discuss this concept. Friends, income tax calculation in interim financial statement. Okay. Friends, income tax calculation, income tax payment, income tax return, is it a quarterly matter or is it a yearly matter? Is it a quarterly compliance or yearly compliance? What is that? It is an annual compliance, right? Because income tax has to be filed on an annual basis. Your return has to be filed on annual basis. Assessment has to be done on an annual basis, correct? So now, friends, first of all, let me talk about what was the problem and why a specific and special guidance. So Anila, advance tax is okay. You are paying advance tax on a quarterly basis. That is okay. But income tax return is an annual compliance. Friends, since you are paying your income tax on an annual basis, you are self-assessing your income tax, you are filing your income tax return, your assessment will get done on an annual basis. But when you are preparing interim financial statement, say quarterly, half yearly, right, you have a profit. And that profit pertains to that interim period only. Okay. Now the question is, if you are preparing interim financial statement, say for 6 months, 3 months, 9 months, you will have a profit. And on that profit, going by the accrual principle, you have to recognize some income tax expense, current tax, deferred tax, right? You have to recognize income tax expense. Now the question is, for example, the company has a carry forward losses of 100 crores. Are you able to understand what I'm saying? For example, the company has a losses of 100 crores, carry forward losses. And the company is closing the first quarterly interim period, Q1. In Q1, the company has earned a profit of 100 crores. Right? The company has earned a profit of 100 crores in Q1. And Q2, Q3, Q4 will come. Now my question to you is, for example, the income tax rate is 25%. And in the quarter one, the company has earned a profit of 100 crore. Income tax rate is 25%. And the company has a carry forward losses of 100 crores. Now my question to you guys is, what is the income tax expense to be taken into the P&L in the first quarter one, in the first interim period? Is it 100 minus 100, 0? Multiply by 25%, 0? Or is it 100 multiplied by 25%, which is 25, or something else? My question to you is, so let me write this question. Let me write this question. A company has earned a profit of rupees 100 crores in Q1. In Q1, okay. The company has a carried forward losses, carry forward losses of rupees 100 crores also. The tax rate is 25%. For the sake of ease, let me make it 110 crore, okay, so that you will not confuse with the number. Question. The tax rate is 25%. Advise, what is the tax expense in Q1 profit and loss? Option number 1, answer. Option 1. What is option 1? Option 1 is 110 crore is the profit minus 100 crore is the carry forward losses, which is brought forward losses, multiply by 25%, 2.5 crore. Option 2, 110 crore multiply by 25%, 27.5 crore. Option 3, other than option 1 and 2. Tell me, what is the right answer? Option 1, option 2, or option 3? Option 3 is the right answer. Option 3 is the right answer. Sir, but what is other than option 1 and option 2? So friends, this was the problem which was addressed by Ind AS 34. Ind AS 34 says that while you will prepare the financial statement, interim financial statement for an interim period, which is less than a year, income tax matter is a yearly matter, right? So you do have a lot of items which will impact your quarter versus year, interim period versus full year income tax calculation. So friends, Ind AS 34 says that income tax for the interim period is recognized or measured on the basis of weighted average annual income tax rate for the full year, right? So it says that whenever you have to recognize income tax expense for an interim period, how you will recognize? You have to compute the weighted average annual income tax rate for full year. Means you have to you have to apply the weighted average annual rate to the interim period profit for arriving at income tax expense. Okay. Right? And how will you do that? So let me again discuss with the example number 1. So I hope you guys have understood this, because this 100 crore loss is not adjusted in the current quarter. This 100 crore loss is for the full year. In the full year profit, you can adjust this 100 crore loss. So if you will adjust this 100 crore loss in the quarter 1 profit, what will happen? You will incur income tax expense only on 10 crore in the quarter 1, and in the subsequent quarters, you will have a higher income tax provision. Am I right? You will have a higher income tax expense in the subsequent quarters versus the first quarter. Is that clear? However, this income tax loss, brought forward loss of 100 crore is not for the quarter 1, it is for the full year. Have you understood the problem and how it is addressed by Ind AS 34? Ind AS 34 says that you have to estimate the weighted average annual income tax rate for the full year. Weighted average annual income tax rate for the full year. Friends, example, in quarter 1, the PBT, profit before tax, is 100 crores. In remaining 9 months, the company has estimated, in remaining 9 months, the company has estimated profit of 900 crores. So what is the total annual profit? What is the total annual profit? What is the total annual profit, friends? So Rahul, the deferred tax is also required to be computed in the same manner, right? I'm talking about the entire income tax. Okay, I'm talking about the entire income tax, because the same rate you have to apply for deferred tax also. Okay. So my current period profit is 100 crores. My estimated remaining 9 months profit is 900 crore. What is my total expected annual income? My total expected annual income is 1000 crores. Okay. Friends, now the company has a brought forward losses of 400 crores. What is my brought forward losses? My brought forward losses is 400 crores. So what is my annual taxable income? What is my expected annual taxable income? 1000 crore is annual income. Expected annual income is 1000 crore. 400 crore is brought forward losses. What is my taxable income? My taxable income is 600 crores. Any problem so far? Any problem? What is my tax rate? What is my tax rate in this question? The tax rate in this question is 25%, which is given. 25%, right? Okay. This is 25%. Clear? So what is my tax expense for the full year? What is my estimated tax expense for the full year? 600 taxable income, 25%, 150. What is my tax rate? It is 25%. What is my weighted average annual tax rate? I am paying 150 crore on the annual income of 1000 crore. Have you understood how I have computed my weighted average tax rate? Right? Right? So how will I compute the weighted average tax rate? So friends, steps to followed. Steps to be followed for income tax expense to be recognized, to be measured for interim period. Step number 1. Step number 1. Step 1. Compute the estimated annual income for the full year. Right? Step number 2. So allow me a minute, Nisha. Let me complete this. Step number 2. Compute the estimated annual income tax for the full year. Step number 3. compute the weighted average annual income tax rate equal to, right, annual income tax divided by annual income. Okay, divided by annual income. Step number 4, apply the weighted average rate to the current interim PBT, right, for arriving at current interim period tax expense. Correct. Whether the steps are clear? So I am applying this step. Compute the estimated annual income for the full year. What is my estimated annual income for the full year? Step number 1. What is my expected annual income for the full year? Yeah, 1000 crore. Okay, this is my step number 1. Step 1. What is my estimated annual income tax for full year? This is my step 2, 150 crore. Then what is my weighted average rate? Step 2 divided by step 1. This is my step 3. Right. Now this is 15%. Now what is my tax expense in Q1? My tax expense in Q1 will be 100 crore multiplied by 15%. 15%. 15 crore, right? So what will be the in the remaining 9 months? In the remaining 9 months, 900 multiplied by 15%. This has to be in the remaining 9 months, 135. The total comes out at 150 crore. So this is my estimated in the Q1, right? Is that clear? Is that clear to everyone? Is that clear to everyone? Now I need to make it more complex. But is it clear to everyone so far? Yes or no? Okay. Now I have to make it more complex. For example, now after Q1, the company is closing the books of Q2. The company has reached to the second quarter. In Q1, the company has already earned a profit of 100 crores, right? Okay. In Q2, since the company has closed Q2 also, the company has earned a profit of 400 crores. And now in remaining 6 months, because in Q2 was very good, so in the remaining 6 months, the company is estimating a profit of 800 crores, right? The first 6 months, the company has arrived at an actual profit, which is 500 crores. And in the remaining 6 months, the company is expecting a profit of 800 crores. So what is my total expected annual income, friends? What is my total expected annual income? What is my total expected annual income? 100 plus 400 plus 300 plus 800. Yes. 1300 crore is my total expected annual income going by the step number 1. Compute the expected annual income. What is my brought forward losses? 400 crores. What is my expected taxable income? 900 crores. Okay. Tax rate is 25%. What is my tax expense is 25%. What is my tax expense? 900 multiplied by 25%. 225 crores. Step number 2. Expected tax for annual. What is my weighted average tax rate? What is my weighted average tax rate? What is my annual weighted average tax rate? 225 divided by 1300. Yes, you are right. This is my step number 3. 17% almost. 17.31%. Now, friends, how much tax expense I have already recognized in Q1? How much tax expense I have already recognized in Q1? No, my question is how much, because Q1 I have already closed. Now I am closing Q2 and my estimates have been changed. My question is how much tax expense I have already recognized in Q1. In Q1, I have already recognized 15 crore, right? 15 crore. Dev, I don't know why you are saying 25 crore in Q1. I have recognized 15 crore, right? So 15 crore I have recognized in Q1. Friends, what is my total profit up to Q2? In the first half year, what is my total profit in the first half year? 500, yes? So this 100 plus 400. So friends, year to date, up to closing of Q2, what should be my total tax expense? 500 multiplied by what? 500 multiplied by tax rate, weighted average tax rate. This should be my total expense. Yes, 87 crore should be my total expense. Yes, so 500 multiplied by 17.31%. This is roughly 87 crores. So what should be my tax expense in Q2? So standard says that, friends, whenever there are change in estimate, okay, whenever there are change in estimate, what you are required to do, you have to compute the year to date tax expense and whatever you have already, the cumulative tax expense minus whatever you have already recorded, that number will be your current interim period tax expense. Okay, so this is 87 minus 50. So 72 crore will be your tax expense in Q2, right? Is that clear? And what about remaining 6 months? What about in remaining 6 months? Simple. 800 multiplied by tax rate. The total comes out at 225. Now the estimate has been changed, Nisha. It is not 150 minus 87. Now it has to be 225 minus 87. This is the estimate. This is the projection. I'm not recognizing. For remaining 6 months, I'm not recognizing anywhere. So just I'm showing you that how this 225 will be reconciled. Friends, have you understood the concept of weighted average annual income tax rate? Have you understood the concept? Yeah. Yes or no? So first I have shown you in Q1, then change in estimate also when in Q2 the estimate is changing. So I have shown you that as well. Now friends, let's go to the illustration number 1 of ICAI study material. While I have covered 3 questions on this aspect, but let's cover the ICAI study material as well. Illustration number 1. Friends, read this illustration number 1. Company A has reported rupees 60,000 as pre-tax profit in first quarter. Okay, in first quarter. Okay, just give me a minute. Yes, company A has reported 60,000 rupees as pre-tax profit in the first quarter and expect a loss of 15,000 each in the subsequent quarters. It has a corporate tax slab of 20% on the first 20,000. Slab rate is given on the first 20,000 of annual earnings and 40% on all additional earnings. Compute the amount of tax to be shown in each quarter. Okay. Friends, what is the income for the quarter 1 which is given in the question? 60,000. What is the estimate? What is the estimate given for the next quarter? What is the estimate for Q2, Q3 and Q4? What is the estimate which is given? What is the estimate which is given in the question? It is written now that and expect a loss of 15,000 each in the subsequent quarter. 15,000 loss they are expecting in each quarter. What is my annual expected income? What is my annual expected income in this case? What is my annual expected income? What is my option 1? Step 1. What is my step 1? Expected income for the full year. What is my step 2? What is my step 2? Expected income tax for full year. Expected income tax for full year. So what is my expected income tax for full year? Tell me. Going by the 15,000 rupee is the full year profit, and it has a corporate tax slab. For the first 20,000, the tax rate is 20%. For the remaining, it is 40%, right? So 20% for the first 20,000. So how much is the tax expense? How much is the tax expense? 15,000 multiplied by 20%, as simple as that, right? So what is my weighted average rate of income tax? What is my weighted average rate of income tax? Tell me. Step number 3. What is my weighted average rate of income tax? Step number 3. Of course, it is 20%. 3,000 divided by 15,000. 20%. Right? Is that clear? Is that clear? So friends, if we would have applied this slab directly on Q1 profit, what will be my Q1 tax? What will be my Q1 tax? 60,000 is a profit in quarter 1. So on the first 20,000, 20%. So 20,000 multiplied by 20%. On the remaining amount, 40%. What is my remaining amount? 60,000 minus 20,000, which is 40,000, multiplied by 40%. So on 60,000 of profit, what would be my income tax expense? If the concept of weighted average annual income tax rate is not given in Ind AS 34, my question is, in Q1, what is my income tax expense? $20,000 is income tax expense. And in future year, there is a huge reversal, okay, in the future years. But in my current quarter profit, the future losses will also get adjusted because the income tax return has to be filed on a yearly basis. Right? So going by the concept of weighted average annual income tax rate, what is my tax expense in the first quarter, second quarter, third quarter, and fourth quarter? So what is my income? My income is 60,000, right? 15,000, okay. Then in third quarter, estimated 15,000. In fourth quarter, again estimated 15,000. What is my average tax rate? 20%. And this is required to be followed in every year, in every interim period. So what is my expense in the first quarter? 12,000 is my income tax expense. What about second and third quarter? 3,000 reversal, 3,000 reversal, and 3,000 reversal. And this is how my total annual taxable income is 15,000 and my total tax expense is 3,000, right? So let me make it more complex now. So while only in illustration, only this part is given, friends, this part is over in the illustration. But now I have made it more complex. When the company concluded the Q2 results, so now the company has arrived to the second quarter, right? It arrived at a profit of 10,000. Initially, the company was expecting a loss of 15,000 in quarter 2, but actually the company has arrived at a profit of 10,000. And now the company is expecting a profit of 10,000 in Q3 and loss of 10,000 in Q4, right? So let me write it here. The extended question from the faculty, not part of study material question, right? So it is not a part of study material question. Your study material answer has been captured till this point. When the company concluded Q2 results, it arrived. So what was the Q1 profit? What was the Q1 actual profit? So Ayush, you know the concept of deferred tax asset, the concept of current tax asset. So what happened? When you have a loss, you will have a deferred tax also, right? And deferred tax is a part of income tax. Deferred tax is a part of income tax. So on the losses, you will recognize an income tax income, right? So whenever you have a profit, like in this case, in first quarter, you have a profit. Right? So whatever you have a profit, you have to apply the weighted average annual tax rate on that profit, right? Since you have a profit, you should have an expense. In the future quarter, you have a losses. In that case, you have to have an income tax income relating to those losses. Okay, it has to be commensurate with those losses. If you will not follow this 12,000, if you will not apply this, number one, there is a non-compliance with the standard. Number two, if you will only recognize 3,000 in the other quarters, you will be having losses, but you will not having any tax income, right? So that is why you have to follow the compliance of Ind AS 34 as a weighted average annual income tax rate, which is on the basis of accrual and matching principle. So friends, the actual profit in Q1 was 60,000. The actual profit in Q2 was 10,000, right? The estimated in Q3 is 10,000 and the loss estimated is Q4 is 10,000. What is my total annual profit? What is my total annual profit? What is my total annual profit? 70,000 is my total annual profit. What is my tax expense? What is my tax expense? Tell me. Tax expense is 20,000 multiplied by 20%, 20% plus remaining other than 20,000, beyond 20,000, which is 50,000 multiplied by 40%. 24,000 is my step number 2. Step number 1, I have computed. Step number 1, I have computed expected annual income. Step number 2, I have computed tax expense. Step number 3, I am computing weighted average tax rate. What is my weighted average tax rate? 24,000 divided by how much? 70,000. 34% is my weighted average tax rate. Friends, how much income tax I have already recognized? How much income tax I have already recognized in quarter 1? 12,000. 12,000. How much is my cumulative tax expense? How much is my cumulative tax expense till quarter 2? What is my profit? 60,000 plus 10,000. My total cumulative profit up to quarter 2 in the first half year to date is 70,000 multiplied by 34%. It comes out as 24,000. So how much I need to recognize in quarter 2? Cumulative tax expense minus already recognized. Is that clear? Cumulative tax expense minus already recognized. Is that clear? Yes or no? Clear? What about Q3 and Q4? What is my estimated tax in Q3 and Q4? This multiplied by this and this multiplied by this. The total comes out as 24,000. Is that clear? Is that clear to everyone? Is that clear to everyone? Is it clear? Completely clear? Yes or no? Great. So friends, let me summarize. Then I will be happy to answer your queries. Let me summarize the overall, which I have discussed since morning. First, I have discussed that there are two standards, Ind AS 1 and Ind AS 34, which talks about the preparation and presentation of financial statement. Right? Ind AS 1 is largely applicable to the complete set of financial statement like annual financial statement. Ind AS 34 is applicable for the interim financial statement, right? And it gives you the option to prepare the condensed financial statement and complete set of financial statement as well. Then we discussed interim financial statement means financial statement for interim period. Interim period means a period which is less than 1 year, right? Where the company has chosen or required to prepare the financial statement for a period within an annual period, right? So that's what we have discussed. Then we discussed this Ind AS 34 does not talks about that which entities are required to prepare interim financial statement. It says that if an entity is required or decided to prepare interim financial statement, then I will be applicable, which is Ind AS 34, right? For the SEBI filing, so for the filing with the stock exchanges, the listed companies are using the format which is given under the SEBI guidelines for those financial results, right? But for those financial results, the financial statement is required, and those financial results were compiled from the financial statement. Okay, so Ind AS 34 is not applicable on the financial results. Ind AS 34 is applicable on the financial statement. Then we discussed whether comparative is mandatory. Yes, comparative is mandatory as per Ind AS 34 also, like Ind AS 1, right? Then we discussed that there are two methods by which you can prepare interim financial statement. Number one is complete set of financial statement, full set of financial statement, where you need to give the entire balance sheet, P&L, cash flow, statement of changes in equity, and the complete set of notes to accounts, right? In that case, you have to follow Ind AS 1. But if you don't want to do such a lot of efforts, because this interim financial statement is not required by much stakeholders, it is more from the internal use. So in that case, standard allows you to prepare condensed set of financial statement, where you will give the balance sheet and every notes to accounts is not required. You will give the balance sheet and the limited notes will be given in the balance sheet related items. Then same way with P&L, cash flow, statement of changes in equity. And as far as notes is concerned, limited notes or mandatory notes to be given, some significant or limited notes to be given. So there are some list of significant events which are required to be disclosed if the amount is material. There are some mandatory disclosures also which is required to be made. As far as reporting period is concerned, balance sheet has to be for the current date as well as the last annual closing date, which is 31st March. P&L has to be shown for year to date with the comparative period, and the current quarter with the comparative period. Statement of changes in equity and cash flow statement has to be year to date. For example, for 9 months, it is 1st April to 31st December. For 6 months, 1st April to 30th September, right? Notes to accounts, of course, for whatever period you are giving balance sheet, P&L, you have to give the notes to accounts for those period which is required as per Ind AS 34. Then we discussed the recognition and measurement. We talked about the materiality concept. We talked about the seasonality concept. We talked about the same accounting policy except there is a change. We talked about the impairment concept. Then we talked about the income tax calculation. This is what we have discussed in detail. If I have covered two illustrations, apart from my own examples which I have given you, I have covered two illustrations, illustration number 1 and illustration number 5 from the Institute study material. You have to cover all the illustration from the Institute study material, right? And illustration number 1, I have extended with my own example, right? I have extended that illustration so that it will become more complex and you will have a more clarity. So I have covered two aspects of income tax calculation. One, brought forward losses. The second one is slab rate, right? So where you will be able to understand that how to compute the weighted average tax rate. For computing the weighted average tax rate, you are required to compute the estimated annual income for the full year. So everyone is required to estimate the annual income. Why? Because due to advanced tax also. For advanced tax, you are estimating your full year income, right? You are projecting. Then you need to compute the estimated annual tax. Then you need to divide your annual income tax from annual income. It will give you your weighted average annual tax rate. Okay. Then you need to apply that weighted average tax rate to the interim PBT. It will give you the tax expense. Okay. So friends, this is what we have discussed. I have shown you the financial results, SEBI results of Indus Towers Limited for June 2024. I have shown you Adani Enterprises annual report, where annual financial statement I have shown you, and interim condensed financial statement I have shown you of Infosys, right? So this is what I have covered in the last 2 hours and 15 minutes. Now over to you guys. If you have any question, I would be. Please raise your hand if you have any question. Question number 1, Rahul is asking, if non-Ind AS company get listed in September 24, then what will be the date of transition and first interim period for financial statement? Question 2, how quarterly depreciation calculated for quarterly financial? I mean day wise or like tax expense, it has to be estimated. So Rahul, first I will give you the answer of the second question, that how quarterly depreciation will be computed. So normally the company follows the day-wise concept. Okay. For example, in the first quarter, if it is 91 days, or in the second quarter, it is 92 days. So it has to be on the day wise, right? It is not on the year divided by 4 or year divided by 2. It is on the day wise. Number 2, you are talking about the transition. So the answer would be too long, Rahul, and you will be able to understand when I will teach you Ind AS 101. But just to give you the answer of this question, that if a company gets listed in September 24, then the first period for the result will be September 24. The first interim period will be September 24, right? And in that case, what is the date of transition? So if September 24 is the period when the company got listed, right? Then you have to prepare the balance sheet of September 30 to September 24, which is 30th September 24. The comparative balance sheet is 31st March 24. And the opening of the comparative is, if 31st March 24 is the comparative balance sheet, what is the annual period of 24 balance sheet? 23-24. So your transition date will be 1st April 2023. So Rahul, transition date is 1st April 2023. Balance sheet is required to be prepared. 31st March 24 balance sheet is required to be prepared, and 30th September 24 balance sheet is required to be prepared. Right? Okay. Any other question? Yes, Abrikesh. Please ask your question or please type your question. So should I unmute you? I have unmuted you. Abrikesh, can someone please unmute Abrikesh? Ashok ji, can you please unmute Abrikesh? Yeah. Abrikesh, please unmute yourself. Abrikesh, you can unmute yourself. Okay, any other student who want to ask any question? Any question? Any question? Abrikesh, you can unmute yourself and then you can ask the question.
Yes, sir. I'm audible now because I
Yes,
don't know. I was
you are
not
audible.
able to unmute myself.
You are
Now, sir, my
audible
question is regarding, my question is regarding the hypothetical amount given in case of seasonal and cyclical recognition, where Q1 10 crores, Q2 10 crores, and then Q3 and Q4 100 crores, being a winter season. So for woolen items, sir, generally what happens is ki for the actual season, for the company who are manufacturing the product, they have at least 3 months ahead, the sale will be increased. It's a primary sale. So, I mean, will it be in the Q3 and Q4 or Q2?
So Abrikesh, that was
Because
just an example. So I
no,
understood what you were saying. So that was just an example, right? So
Okay.
you have
Agreed.
to record your sales on an accrual basis. For example,
Yes.
if the sale is happening on Q2, you have to record in Q2, right?
Okay.
Because it will happen always, na? For example, in Q3, the winter season will start. So the sale will started
Yes.
happening in Q2. So in every year, it will happen like that only. So you have to mention that since it is a seasonal or cyclical industry, and that is why in Q2, you will have more sales because the company has started selling for the preparation of winter, right? So there are more buyers, more customers, and hence Q2 sale is more than Q1, right? So this is how you will do that. Yeah.
Okay. Thank you, sir.
Yes. Any other question? So one of the participant is asking what will be for subsidiary company of Forex subsidiary, foreign subsidiary company where financial year period is different. How to show financial statement and interim financial statement is required for subsidiary of Forex company. So because the name is not coming, I cannot call the name because I can see HIT is written only. So I don't know what is the name. Hitesh. It could be Hitesh. So Hitesh, first of all, the subsidiary company financial statement is only required for consolidation, right? And the standard which takes care of consolidation is Ind AS 110, which provides that while consolidating a foreign subsidiary, there could be a difference of 3 months. Okay. So 3 months gap may be acceptable. For example, if you are preparing a financial statement of a consolidated financial statement of a parent with a subsidiary for 31st March. So if that subsidiary has a financial statement up to 31st December, that is okay. So the difference should not be more than 3 months, right? So you can take those financial statement, you can take the major adjustments for the current period, and that number you can cover, that number you can capture in your consolidation. If I talk about interim period, for example, interim period is current interim period, right? So in that case, you can ask for, what you can do, you can ask for the last quarter subsidiary performance, right? And you can do the major adjustments which has happened in the last quarter and in the current quarter, so that you will arrive at a current period number. Okay, you can do that. Yes, you can extrapolate also, subject to the adjustments. Rahul has a last question. In Ind AS previous gap carrying value deemed cost exemption as per Ind AS 101 means net block become gross block on the date of transition. Is this view correct? Yes, Rahul. So Rahul, your questions are largely on Ind AS 101. So students, Rahul is asking question from Ind AS 101, first time adoption of Ind AS. So don't get confused. Probably you will get confused that I have not discussed those things. So these questions are from Ind AS 101, okay, not from Ind AS 34. Yes, Rahul, but to answer your question, yes, the net block become the gross block under Ind AS. Any other question on Ind AS 34, guys? If you don't have any question, I would be happy to conclude the session. Any question? I hope you have enjoyed the session. I hope you have understood the session very well. I would request all of you, for the sake of revision, please go through with the video which is uploaded on YouTube, right? Do the revision, and as far as the practice is concerned, so practice all the questions of study material. It will give you good insights. It will give you good practice. Thank you so much, friends. Thank you so much for the patient listening and asking so many questions. So thank you so much. I have thoroughly enjoyed the session with you guys. Thank you so much. Bye-bye. Take care. Yes. Thank you.